Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar faced renewed downward pressure on Monday, retreating towards the key level, which is seen as the 60-day simple moving average, around 62, 60, 65, which has so far been respected. Meanwhile, global markets were rattled by escalating trade tensions and uncertainty over Trump administration policies. Tariffs on Canada, Mexico, and China have fueled much volatility, and with the EU set to face higher levies from April the 2nd, could see more volatility. Recession fears are now mounting, with Trump calling the current economic phase a period of transition, while Treasury Secretary Scott Bessent warned of a potential detox period amid federal spending cuts. Investors now turn to this week's economic report, which is the jobs opening, CPI, PPI. But with the technicals, as I mentioned, the 60-day moving average has held at the level around 62.60. Let's see if we can see an increase in momentum, and with the broader target still calling to 64 to 65 cents. Turning to the euro dollar, it extends its gains above 108, refreshing a 4-month high, which is now around 109. While the US dollar index dips to 103.60, its lowest in 4 months. One takeaway from the technical pattern I see is that we're extremely overbought and therefore could see profit taking very soon. And if we look back to this level seen roughly around late October, November, we can see the market staged a very significant downturn from 109. So I do stress and be on your guard just in case we see something similar to this move, and therefore could see a tumble back towards the region of 108. But overall, keep an eye on the dollar. It is somewhat heavy and therefore could see a move down to 102.50, therefore could put the move towards 109.5 for euro. The dollar yen traded near a 5-month low, marking its 4th consecutive daily decline since breaking the key level of 148.70. The breakdown increases down risk and therefore with a target seen given from the weeklies of 144. And if we look at the support level underneath, I view from 146.60 to 145.80 and then 144.40 to 144.80, the measured move down. Nevertheless, the trend is still somewhat heavy and still holding in its pattern to support the downward call, and therefore let's see if it can emerge. The trend is very strong with the ADX, and technically everything's married up to support the downside move. Sterling, while the market since reaching its measured move from the inverse end shoulders of 129, still at this point keeps me neutral due to the fact I'm still looking to see if we can get a pullback. But given how the technicals are looking, that may not be the case, and we could be going back to highs seen late last year of around 130 to 130.5. That's not a strong call, but still keeping in mind in how this pattern is holding. Turning to spot gold, the market is still somewhat lurking on the safe haven demand due to the trade fears and also the risk this week of the US CPI data. Nevertheless, any weakness will find bargain hunters close towards that 2,850 to 2,870 mark, but I feel that we may not see that in the short term as the demand appears to be coming back and therefore looking towards 2,950 as a potential target, and with 2025's call at $3,000 an ounce. A weaker play when it comes to oil, but I still feel the market's showing a bit of bullish divergence and therefore could see a rebound from 65 and looking up towards 66 to 67 as a potential target. I don't want to get too negative down here now, especially with this divergence and with a broader divergence from the MACD. Could see a significant upturn. Let's see if the market can rally. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report and I hope you enjoy the great start of the day.